What is up, guys? As you guys know, the stock market has not been very pretty to us retail traders lately. But there's something I want you to notice when looking at the S&P 500's heat map. Most of these sectors that are getting hardest hit right now are sectors that have a lot of retail traders, like electric vehicle industry, semiconductors, software, technology in general, drug manufacturing, and healthcare. A lot of these sectors have a ton of retail traders in them, whereas oil and gas, healthcare, entertainment, except for Netflix, and financials. All of these sectors have been doing pretty well. So, something I'd like to point out is that you don't see many retail traders in these sectors. These sectors usually have a lot of older people, older investors who have lived for this, who live for moments like these. They don't sell their stocks, they buy more. And the thing that is happening now is retail traders are getting scared and selling all of their stocks that they have. Whereas these other stocks with long term investors who have large amounts of capital are not selling because they're used to this. So let's take a look at Nasdaq. As you can see, Nasdaq has not been looking very well. It's been completely selling off since my last video. So let's just chart this out and see where it could potentially stop and make a reversal. So first I'm going to draw some trend lines here. I'm going to draw some support lines. But I'm actually going to have to get a little bit closer in there. Okay, so this is what we're looking at here. Straight off the bat, what I see here is this level at 12,000 is very substantial. I mean, you could see that it's been a resistance level for a little while. One day it came up, got above it, rejected it, came back down, came back up, tested it again, could not break it, came back down, and eventually bounced off of it until it could break above it. We have not tested this level of previous resistance once. So personally, I think that we are going to sell off into this level of support. But if this level breaks, then where will we go? Well, let's take a look. We do have gaps on the chart between here and here. Gaps do like to be filled, but that doesn't necessarily mean that they will be filled right now. I personally do not think that this is a market crash. I think that this is a well-needed pullback. Like I said, there's been a lot of money in the market recently with all of these retail traders chasing GameStop, AMC, and thinking that the stock market is just some place where they can put their money anywhere and make millions, which quite frankly is not the case at all. So as you can see here, this level was a resistance level and acted as support. We just broke through this today and yesterday. Not a good sign. So pretty much what I see here is we do have support in between this level and this level at 12,000, but nothing too substantial. So this is what we're looking at. I mean, we're getting a lot of selling pressure. We're getting a lot of sell pressure, which is not a good sign. This is the RSI. I don't know why it just got all big like that, but as you can see, it is completely oversold. Let's see if I can bring this back down now. Oh, come on. What are you doing to me, RSI? I gotta, get out of here. Okay, so we're completely oversold right now, but the thing is there's a ton of selling pressure on the market, and that means that it could go a lot lower. But I think that it's going to test this level right here. This level that was previous resistance, I think it's going to test it and bounce back. So let's take a look at Tesla. Tesla has been selling off extremely hard lately because Tesla is probably the largest retail trader's position. The average retail trader has shares of Tesla. And the reason why the stock market is falling so bad right now is because retail traders are getting scared and selling. So let's take a look at Tesla a little bit closer. So recently, as you can see, Tesla was pumping, consolidating up here above this 820 level. It was looking really good for a breakout to 1,000, but then they had some really bad earnings and it broke below this level of support. This was the first indication that Tesla was looking very weak. It bounced back up, but could not test this level of resistance once more, and started selling off. We have not seen any tests of these resistance levels since. So, what I see here is obviously a very bearish chart. We broke through other support that we had here. Let's see if I can get a... Okay. So we had some... I mean, I wouldn't even call this support. This is just a level of consolidation, which we completely skipped now. But this is what we're looking at now. We're going all the way back down to the split levels, in my opinion. Let me get a little bit larger chart. Okay. So as you can see here, Tesla consolidated between 330 and 500. I think that Tesla is going to come back down and test this 500 level. It has not tested this level of support, this level of previous resistance, which now turns into support. It has not tested it once. It only broke through it and has not come back down to test it. Pullbacks are very natural and normal in stocks. You should expect it in every single one that you buy. But quite frankly, the entire market is completely overbought, and right now it is correcting. So now what I'm saying here is it's definitely forming a head and shoulders. You can anticipate a little bit more of consolidation here, and then if we're lucky, it will hold above this level of 500. And if not, I think it will probably get back in between this range right here. I think that it will get in between this range that it was trading at post-split. And I think we will probably consolidate between this level for a little while. And then it really depends on the entire market sentiment. Like if the market is still bearish, if people are still selling their stocks, then Tesla's going to sell all the way back down. It's going to go a lot lower. But honestly, I wouldn't be afraid. We got stimulus coming up. The Fed is doing everything they can to prevent a market crash. Another thing I want to point out is VIX. VIX is the volatility index, also known as the fear index. VIX goes up like crazy whenever there is a fear of a market crash. As you can see right here, this is when the market crashed last year. You can see it started moving like crazy, started pumping. This is what we're looking at now. The market has been horrible, and VIX is barely going up. This is a dead giveaway that the market is not crashing right now. So this is a resource that you want to look at. If you get scared, look at VIX. Make sure VIX is not pumping like crazy. And even if VIX is going crazy, it is more of a you're looking for consistency. If it's pumping a few days in a row and it's completely blowing out these previous levels that it could not get above, like this level in general right here. If it's getting above this level, any of these levels, if it breaks above here, then you should be worried. But right now, we are nowhere near that level. So trade safe, guys. Market is definitely not crashing right now. Hold strong. That is my advice. Hold strong, and you will not lose, because stocks do recover. Stocks do pull back. I mean, it just happens. That's what the stock market is. So trust your gut. Be careful. Play it safe. We don't know when the bottom is. We don't know when the bottom will be, but stimulus is coming. The Fed is doing everything they can, lowest interest rates possible. So yeah, I mean, have a good trade, I guess. Goodbye, guys.